What's going on, pimps? It's your boy from SMB. Another day. I feel like I'm in that movie Groundhog's Day where I get up and every day I look at the market and it's like, wow, it's going down. Just like yesterday. Just like the day before. The day before that. Is this still the same day? Are we even moving in time? Am I stuck in time? Like, is it? It feels like that, honestly. Another sell-off. So I don't know why I didn't buy puts. I don't think it was like the chart telling you to buy puts, but I said yesterday after FOMC, I was like, oh man, I remember what happened last FOMC. I hope that doesn't happen again. Oh no, it happened again. Look at this gap, dude. This market sucks out loud, dude. It gaps down. Look at all this movement. I don't get to touch any of that movement. The market, half the movement, you don't even get to trade in this market. As a day trader, during the day, half the shit happens at night. If I was a night futures trader, yeah, you get some of this movement. But look at this. Gap down from 282 down to 276 instantly. Boom. 2% down. That's a whole day's, like, really, that used to be what was a bad red day. That's like an entire day's worth of red overnight. You wake up and it's like, boom. It's like a day went by and you slept through the entire day. But no, it's just futures. Um, so the gap down, and I need to just like tattoo on my forehead. If the market gaps down, buy a put at 6:30:01, 6:30 in the morning, 1 second. First thing you do, buy a put because every time it gaps down like this, it just keeps going. The open was the high point of the day, and we just keep going. It just keeps tumbling. Terrible stuff for us bulls out here. There's nowhere to hide. This market, boy, oh boy, we almost tapped 5% down on the day. But I did. I woke up. I just as I usually do on red days. I just stood here like, are we still gonna keep going down after gapping down that hard? And I just grabbed the put and I was like, you know what? I don't need to waste the mental energy. This is not worth my fucking time to stare at this. So I just grabbed the put and walked off, and that's how easy it is to make money sometimes in this market. We grabbed, look at this, beautiful. One order, grabbed it for $361, sold it for $460. I don't even need to tell you my technical analysis. Besides, oh yeah, we gapped down 2%, and by the way, we're heading into a fucking recession, and not just any recession, a goddamn depression. Um, yeah, so we just went straight down, straight down, straight down. Not really straight down. We chopped a lot. There was a lot of chop today, so I was happy to just grab that put and walk away. And it's like, what am I gonna look for a upside play on anything today? There was no upside to anything. You grab a put on the Nasdaq, that encompasses the entire tech market because all of tech was bleeding. So why even bother looking through these other stupid little names to see if anything's moving otherwise? I know everything's just moving with the indices, with the ETFs. So, yeah, it was one of them days, boys. I tell you what, I'm aging. I've aged 5 years in these past 6 months, dude. What a shit show. So we do have. I mean, that's all I got to talk about with that trade. There's nothing to it. I remember what happened last FOMC. Um, the first part of the equation last FOMC, we gapped down hard and we just kept selling. So I saw the first half was fulfilled, and I saw the second half was fulfilled because we just kept selling. And I was like, you know what? There's no reason for the market to go up today, so it's not going to. And yeah, we bought a put and took a nice little $100 profit, nice hedge on our bullish portfolio. So now to talk about, I am swinging calls, baby. Ooh, we gonna swing a call? Not calls. I'll just use singular call. So let's look at NDX. That chart's not such a mess. Oh yeah, there we go. Wait. It, ooh, ooh, wait. Oh no, that was right. All right, live charting. I know this stuff's thrilling. Thrilling. So we're right here. We're right smack dab at support on the Nasdaq. Right there. I mean, It's the old meme. You go long at support. If we break support, I did hedge myself with one put, but we're right here at support. We're oversold on the daily. We're oversold, not quite on the daily. So we could tank tomorrow. So that's why I hedged myself. We're way oversold on the weekly. Last time we were this oversold on the weekly, we got a big fat bounce. Um, Tomorrow is quad witching. That means contracts and everything is expiring. Futures, options, all the monthly or quarterly contracts expire on the same day, which could be a very volatile day. Um, doesn't mean it's going to go straight down or straight up. It means it's probably going to be a max pain, which means people on both sides get destroyed. And I just think we're here at support. We've sold off. We got the news of the 75 basis point hike. We price it in. If it says not a price in day, then I don't know what is. We dropped 4%. No bulls to be seen anywhere. I think we get any kind of good positive catalyst. Could be a short squeeze situation, but I'm just thinking we're so oversold on the technical side that we gotta get a little bounce so they can keep shorting it down. This is what they've been doing to us the entire time. They give us bounces so they can short it further down. They have to do that to keep it going. VIX spiked. VIX is right up here at resistance. Same resistance it's basically been at this entire time. And you notice whenever VIX gets up here, it has these big wicks, but the candles close lower. The wicks go up, but the candles close lower, and then we get a bump. So that's what I'm looking at. But I can sleep tonight. You know, the nights where I just buy a call and I don't hedge myself, I don't fucking sleep. It's miserable. I sit there and I think I have dreams where I wake up and look at my phone and the Nasdaq is down 20%. I'm not even kidding. That actually happens. So I freaking hedge myself with a put, and that's just the way it is. So my thinking is this won't just be a push to the upside that goes like 5 minutes and comes back down. I think we'll probably get at least a couple day rally off of this potentially. We got a 3-day weekend coming up, so there could be big buys into the weekend. You know, everyone sees it so oversold. Maybe we get some good news over the weekend. Who knows? The Ukraine war ends. Who the fuck knows? So my thinking is, if we gap up, perfect, fine. This put, so I have a call that's worth $232, a long out of the money, long expiration call. We have just over 2 weeks, or just under 3 weeks on this. With a 290 strike price, so that would be a pretty big bump in the Nasdaq. That'd be about a 6% bump in the Nasdaq, which if you look at these rallies, that's usually what they are, and not even rallies, more like 3-day bounces. That's about what we get out of those. Is big ol' like 6% jumps, 7% jumps. So we're about due for one. But then again, none of this could even matter if there's just the market completely capitulates tomorrow and we drop another 8% or whatever. So that's why I grabbed the hedge. So my thought process is, if we gap up, I cut the put. It'll hurt my profits a little bit, but that's what you gotta do in this huge bear market we're in. It's insane. I've done this a lot recently, and I just think to myself, how insane is it to just swing calls overnight in this market? Just like put your balls in just hit them with a cheese grater. It's like that's what you're doing basically. It's just insane. So I'm just not going to do that. We're going to hedge ourselves. So all right, scenario 1, we gap up. The put it loses like 30 or 40 bucks. It's only a $74 put, and it's very close. We're out of the money, but very close expiration. So if we gap down like 3%, the thing will triple. If we gap up 1%, 2%, who knows, some crazy shit, this thing will basically drop 40 bucks, and I cut it and forget about it, and my call will double. So it hurts your profits, but that's scenario number 1. If we gap up, I sell it. Scenario number 2, that becomes the play. We gap down, and we know what happens on a gap down. It just keeps going down. So we gap down. This thing will double. My call will get cut in half. I'll lose like 100 bucks, but my put will double. I'll get like 70 from that, and then I scale into those puts, and that becomes the play for the day. Boom! You wake up and you already got your day set up for you already. I know what I'm gonna do. If we gap down, I just buy more of these puts. We scale in and we ride those the entire day. And then if not, then I cut it and I hold my call and we enjoy the green. So I like having it's all perfectly set up for me. Both sides, doesn't matter what happens. Because it seems like every freaking day we gap up in this stupid market, I swear. every day it's a gap up or a gap down or a gap. It's never a sideways. It's always up, down, up, down. And I would be willing to bet that now that we're at support, and all it is, so the scary part is that we've tested this support once, twice, thrice, so this will be the fourth one. So you're getting a little hairy situation, but we do have a bit of a falling wedge now. So we could bounce here. It is like a psych level 270 we're bouncing off of. We could come back up here to 290. That's why I grabbed these 290s or 280s or whatever. But I'm probably not going to hold it for more than a day or two. It all depends on what tomorrow is. But I feel good. I'm like, this is perfect. If I'm prepared for either way. I will lose money if we gap down hard, but I won't lose nearly as much. And that's the other thing is our portfolio is very long. We only have long positions, so I will already lose a bunch of money off of that. But I just think it's a good way to go about it. I think just going just blindly holding a call in this market is ridiculous with no hedge. So, or just holding calls in general is ridiculous. What am I doing? Just wait for the next bounce and short it like everyone else. But yeah, that's about all. That's about all I got on that. What else happened today? Oh, Adobe. I think Adobe. Where are we? Adobe down 4%. Adobe, I think, had bad earnings. What a shocker there. Another tech company with bad earnings. Did not see that one, folks. Every day I'm surprised. Adobe. Hey, revenue beat and EPS beat, so it must be really bad guidance. Once again, we're back in that. We're back, baby. Earnings, baby. Where if you have good earnings, you might go sideways or go down 3%. If you have great earnings, you might go up 4%. If you meet your earnings, you go down 10%. If you missed your earnings, you go down about 20%. That's where we're at. It sucks. So as of right now, the Qs are actually kind of going up a little bit, but I mean, you can already see right now. This call up $6. This put is up $6, but the put is closer out, so it's way more leverage. If it tanks tomorrow, you know, I already explained it. So I'm perfectly fine with that. I think we're in a good spot. I think it's going to move a lot in either way. That's the thing I don't want is if we just go sideways. But in this market, you just know that's not going to happen. We're going into that 3-day weekend. There's going to be some movement tomorrow. So I think that might be about it. Today's just more evidence of how bad things are, where we're headed. The market is always looking forward, and yeah, it's in a point where inflation is bad, so stocks go down, but then interest rates are bad, so stocks go down, but interest rates have to go up to make inflation go down, so that's good, but the stock market just knows like inflation on top of increasing interest rates is just going to put a stranglehold on the economy. It's going to choke us. We're not going to be growing through this. We are going to recede, aka recession. So another day of proof of that. And yeah, a lot of, I mean, geez, we're getting to the point where these things, and this is another thing I'm looking at, Qualcomm's also right at support in this falling wedge that I used to be in. Look at a joke. What a joke. It broke out of that and it went up like $3. What a freaking joke. So that's something worth watching. I'm not going to add more. I don't want to add more, but yeah, just, I mean, even oil companies, oil is just, it's plummeting right now a little bit. I'm going to watch out for ExxonMobil. We might get a bounce off that support level. These oil stocks, they ain't done yet, sis. I'll tell you what. I feel like there's a lot of people that have been waiting for a big pullback to get in on this because everyone knows oil is not done yet. Yeah, anyways, shorter vid for today. Just not a lot to talk about. Just a complete, absolute meltdown. Just another friggin' Thursday, boys. No news today. Just market does not want to go up. I'm looking now. So now SPX. This is what I've been doing with Bitcoin too. Oh my God, you have to zoom out to the weekly. So this is SPX. You would think things are so bad. Like, how are we still? We're still up so high. Like, there's still so much room to come down. It's crazy. So next big key fib level on SPX is 3,500. I don't think that holds up. We're already almost close to pre-COVID. Pre-COVID was 3,400, and we're 3,600. We're like that close to pre-COVID. That's so crazy, dude. That's so nuts. Jeez, so crazy. So next fib level we're watching it closely. It's gonna be 3,500, everybody. SPX just has such a long ways to go. And you look at like Apple, I mean, the most heavily weighted company in SPY. Look how far up it is. It still has so far to go down, dude. So far. This thing ain't done yet. I mean, pre-COVID, well, pre-split, but pre-COVID, pre-split, I don't know what it's split at, but it's 82 bucks. That's where it'd have to go. It could still drop like another 40%, everyone. Like, this shit's crazy. So, I don't know. Don't know where to go from here, really. We'll just see what the market gives us and react. That's all we can do. So, catch you guys later. Quad watching tomorrow, baby. Watch out. Peace.